Welcome to the Deep Dive, the only place where we turn really complex compliance documents into crystal clear insight.
Today, we're tackling a big one.
A huge one. We're getting into one of the murkiest areas of Australian payroll, calculating the minimum superannuation guarantee, specifically what counts as ordinary time earnings, or OTE.
And this is so critical. I mean, for every employer, every employee. The ATO guidance is complex, but the stakes are incredibly high.
Right.
If you get OTE wrong, you underpay super. And that triggers the superannuation guarantee charge, which comes with, high interest and admin fees. It's a mess.
So let's start with the terms, because the language here really matters.
Yeah.
We often hear salary and wages and OTE used like they're the same thing.
They're not.
Can you just clarify that distinction? And I guess more importantly, why should we care about the difference?
Okay, so OTE is the number you use to work out the minimum super contribution you have to pay. It's your proactive compliance measure. Salary and wages is a much broader legal term, and here's why it matters.
Yeah.
If you miss that minimum payment, if you're late, the penalty, the super guarantee charge, is calculated on that bigger salary and wages figure.
So the scope actually widens the second you fall behind. It's like a compliance multiplier effect.
Precisely. So our mission today is really to distill all this ATO guidance into clear, actionable principles. We're going to cut through the payment types and find those surprising, yes, this is OTE, and no, this isn't answers.
Okay, so we'll go by category, starting with the bedrock, gross payments.
Mm-hmm.
Let's unpack this with, I guess, the first and most reliable principle.
Right.
OTE is generally remuneration for your ordinary hours of work.
Correct. So the core inclusions are pretty obvious, right? Your ordinary hours, casual loading, shift penalties on those ordinary hours, daily rates, flexi time, all the standard stuff.
But the real insight comes when we ask, what if ordinary hours aren't actually defined anywhere?
Yes.
This is where it gets really interesting. If an award or an agreement doesn't say, 38 hours a week, what happens to the definition of ordinary?
Then the definition just defaults to the hours the employee actually works. If the hours aren't specifically called out as overtime, then by default, they are ordinary hours.
Okay.
Let's look at the example of Kim, who works in a call center on shifts.
Right. So Kim's award, it doesn't specify her work pattern or her ordinary hours. She picks up extra shifts all the time, and they're not paid at overtime rates, just her standard shift pay.
And because there's no contractually stipulated baseline for ordinary hours, the ATO sees all the hours Kim gets paid for as, remuneration for ordinary hours. The entire payment is OTE.
Including those extra shifts.
Including the extra shifts. And this also applies to people with really irregular work.
Like Evan the fruit picker, who's paid on piece rates.
Exactly. His award says nothing about ordinary hours, so his entire payment, per kilogram of fruit picked is OTE. The work is variable, but that doesn't matter.
So the defining factor isn't the rate of pay. It's the duty performed during a time that is not officially called overtime.
Yes. And that principle gives us one of the most counterintuitive inclusions, breach of break payments.
Okay, I want to challenge this one because it feels like a penalty. If an employee gets paid at overtime rates because they didn't get a meal break, why on earth would that be OTE?
It's a crucial insight into how the ATO interprets this. They focus on the reason for the payment, not the punitive rate.
Okay.
The payment is for the employee remaining on duty for working when they were supposed to be resting. They were still performing their duties during their ordinary working cycle, so they're considered to be working ordinary hours.
Even though the payslip says overtime rate.
That's irrelevant to the OTE calculation.
Wow. So the lesson is, don't trust the name of the rate, trust the function. Was the employee doing their ordinary job? That's the real question. Okay, so if that principle holds for time worked, we have to test it against paid absences. Which brings us to leave, our second section, and this is where all the exceptions start to pile up.
Generally, yeah. If you take leave that just replaces your normal work, it's OTE. So think annual leave, sick leave, personal or carer's leave, RDOs, even standard long service leave.
Assuming it's not one of those portable schemes.
Right, assuming it's just accrued under a typical arrangement.
Now for the classic trap. The one we know gets so many payroll teams. Annual leave loading. Tell us why this is so difficult.
Annual leave loading, or ALL, is OTE unless you can clearly demonstrate in writing that the loading is paid solely as compensation for a lost opportunity to earn overtime.
But how does an employer actually prove that? I mean, that sounds incredibly subjective.
The ATO is really clear on this. You have to be able to prove it's based on a specific lost opportunity for overtime or shift penalties. If your award just says, employee gets 17.5% loading, and that's it,
With no reason why.
then the whole 17.5% is OTE.
So if the loading is just a standard payment to everyone, whether they ever work overtime or not, you've got to pay super on it. That nuance is massive.
It is. If you can't explicitly justify that link to lost overtime, you must include it. It's much safer to just assume it's OTE unless you have rock-solid proof.
Okay. Moving on from that, there seems to be a clear category of payments for absences that are consistently not OTE. It looks like they relate more to civic or family duties.
Exactly. These are ancillary or statutory leave types. We're talking about employer-paid parental leave, government-paid parental leave, community service leave, jury duty pay, and defense reserve leave.
None of them attract super.
None of them attract the minimum SG contribution because they aren't considered pay for performing ordinary hours of work.
And you mentioned a distinction with long service leave. Why is portable LSL the kind you see in construction, not OTE, when standard LSL is?
Well, standard LSL is an entitlement you accrue while doing your ordinary work for one employer. Portable LSL schemes are, they're administered under different state laws and are explicitly excluded from the OTE definition. It's all about the regulatory source of that payment.
That's a great way to think about it. Okay, let's shift gears to Section 3, allowances, overtime, and bonuses. Here it feels like we ditch the hours worked idea and focus completely on the purpose of the payment.
Absolutely. The function of an allowance is everything. If it recognizes a skill or higher duties or adverse working conditions, supervisor pay, first aid allowance, height money, it's remuneration, it's OTE.
But what about allowances that are meant to cover expenses? Tools, meals, travel. This is where I imagine misclassification happens a lot.
This is where the partial compensation rule kicks in. If an allowance is paid that only represents partial compensation for an expense, it is OTE. The ATO basically assumes that any amount not reasonably spent is just extra pay.
So if I get a $50 car allowance each week and I only spend $20 on fuel, the whole $50 is OTE.
That's correct. The full $50 is OTE. The only way an expense allowance is not OTE is if the employer pays it with a reasonable expectation that the money will be fully spent by the employee.
Let's use the example of Mateo's tool allowance to contrast that.
Right. So Mateo gets a tool allowance that covers the full expected cost of buying and maintaining his specialist tools. Because there's a reasonable expectation that whole amount will be spent just to do his job, that allowance is not OTE.
But if the allowance was, say, way more than the cost of the tools,
then the ATO would likely view the excess as supplemental pay, and yes, it would become OTE.
that helps a lot. Okay, moving to overtime. Thankfully, this rule seems pretty straightforward.
Yes, this one's clean. Overtime payments are generally not OT. That includes hours worked beyond ordinary hours, time off in lieu of overtime, and on-call allowances for hours outside the normal work cycle.
So Pierre works his 38 ordinary hours, which are OTE, plus 10 hours of overtime.
Those 10 hours are explicitly not OTE. It's a clean break.
Great. And finally, in this section, bonuses and commissions. How are these treated?
They're generally treated as remuneration for effort, so they are OTE. Think commissions, performance bonuses, Christmas bonuses, even sign-on or return-to-work bonuses. They all relate to the performance of duties.
But there's a critical exception based on timing, isn't there?
Yes. If a bonus is paid solely for work performed entirely outside of ordinary hours, it's not OTE. So let's take Jessie, who gets a $1,000 bonus for hitting a project milestone.
But the catch is that she had to work all weekend to do it. The work was done entirely on a Sunday, outside her normal hours.
Exactly, because that $1,000 is directly and solely tied to work done in what is effectively an overtime period. That bonus is treated like an overtime payment. It's not OTE.
And the employer would have to be able to prove that link.
They'd have to demonstrate it was paid only for that out-of-hours work.
Okay, we've covered the rules for ongoing employment. Let's move to our last section, Section 4, which covers lump sums, termination payments, and the complexities of salary sacrifice.
Right. Starting with back pay, it's pretty simple. Payments in arrears are OTE if the original payment was OTE. You just have to carve out any overtime components.
And things like return-to-work payments.
Also OTE. They're an incentive to resume work.
Now, termination. This is fraught with error. When someone leaves, which final payment still gets super? The list of what's not OTE seems much longer than what is.
It is. Let's start with the one key inclusion. The single most important payment that is OTE on termination is payment in lieu of notice.
Regardless of why they were terminated.
It doesn't matter. If the employer pays out the notice period, that payment is OTE. It's seen as replacing the ordinary hours the employee would have worked.
Okay, that's clear. But what about all the unused leave? Annual leave, sick leave? Surely that was accrued during ordinary hours.
It was, but the ATO explicitly says that any payout of unused accrued leave on termination is not OTE.
Wow.
This is a really common and costly mistake. We're talking unused annual leave, leave loading, long service leave, RDOs, all not OTE when paid out at the end.
But why? Why is notice OTE, but a giant bucket of unused annual leave isn't?
Notice is treated as current pay. You're being paid to not work for a future period. Unused leave, on the other hand, is treated as a final lump sum payment that doesn't relate to work currently being performed, so it's exempt from the minimum SG rule.
And what about the big payouts? Redundancy, severance?
Genuine redundancy payments, compensation for loss of jobs, severance pay, and those ex gratia or golden handshake payments are all listed as not OTE.
So let's apply this to Michael's redundancy. He gets a package of $40,000. It includes redundancy, a gratuity, and $10,000 for payment in lieu of notice.
In that whole $40,000 package, only the $10,000 for payment in lieu of notice is OTE.
So Super is only paid on that $10,000.
Correct. The other $30,000 is non-OTE, and the payroll team has to be able to isolate that payment in lieu of notice from the rest of the package.
We have to spend a moment on salary sacrifice because this can shift the whole OTE base. Does sacrificing salary automatically reduce the amount Super is calculated on?
No, and this is another costly error. The rule is based on a hypothetical. If the money being sacrificed would have been OTE, if you were paid it directly, then the sacrificed amount remains OTE for the Super calculation.
So if my salary is $100,000 and I sacrifice $10,000 of that into Super, my OTE base for my employer's calculation is still $100,000.
Correct. The SG has to be calculated on the full $100,000, even though you only got $90,000 in cash.
But the exception holds if the original payment was non-OTE.
Yes. If you sacrifice an amount that wouldn't have been OTE in the first place, like say you sacrifice your overtime pay or part of a parental leave payment, then that sacrificed amount is not OT. The OT status follows the source of the funds.
So at the end of the day, what does this all mean for you, the listener, trying to quickly check your payslip or manage compliance? We've covered a dizzying number of rules.
The main takeaway is synthesis. You have to move past the payment name on the payslip and look at the underlying purpose. Was this payment for ordinary work performed or for higher duties? If yes, it's OTE. Was it paid to compensate you for an absence like jury duty or for a necessary expense or for work done outside ordinary hours? If so, it's probably not OTE. Focus on that purpose.
That distinction between pay for ordinary work versus compensation for something else seems like the most reliable guide. But we also have to remember these rules are just the legal minimum.
That's a crucial final reminder. This is all about the minimum super guarantee obligations under ATO guidance. An employer might have additional obligations under an award or an enterprise agreement that force them to pay super on things that the ATO says are non-OTE.
Like overtime, for instance.
Exactly. Some awards say super must be paid on overtime, so you always have to check the specific industrial instrument.
An essential final check. And as we finish our deep dive, here's a final provocative thought for you to explore on your own. We know that unused annual leave on termination is clearly not OTE, but consider the rise of very specific retention-based incentives. How often do these complex work-related bonuses get accidentally grouped in with non-OTE expense allowances by mistake? This could create a huge hidden compliance risk for employers, and it means lost super contributions for the employee. So think about where that fine line between remuneration and expense really sits